Another one, Paul here. Today I'm going to give you guys a new strategy. Now this strategy is kind of like it's going over everything that I've talked about. So it's like taking a little bit from each strategy from like the last three kind of videos that I've made. The last three videos I've made on strategies. This is kind of like pulling a little bit from each one of them. Now, if you watch those videos individually, they all have strategies where you don't have to use this strategy, but they work well on its own with the strategy with the video that I have put out for them. But this is kind of putting a combination of all three of them into one, and it kind of works. So I'm probably gonna go over the strategy for the majority of the assets out there. So I'm gonna start with stock market today, and then I'll show you what the strategy actually does. Is it uses the Adian oscillator. It uses the differences of moving averages, which is the 9 and the 20, and then it uses the linear line method. So those are all of what I've talked about in previous videos with videos. And so if you want to learn about each one of those, go back to those videos. I'll put some videos below in the description where I go into these specifically these strategies. But today I'm going to go over the formula of how to set up a combo with all of them and how to do it for the stock market, and then I'll move on to some other assets. But today we're going to be showing you how to plug in this combo strategy. It works really well. And I'll show you how to set up and what I do to when I'm looking for my trades. Okay, so first to set up a strategy here, you want to set up your 9095. That's what right here. You got the CM EMA trend bars, which is the 90 and the 95, which is basically the 9095. If I don't really mention a lot about the 9095, but it basically acts as like a support zone. So the price of the candles, they bounce a lot from that 9095, which is why it's an important moving average to look at. So that's why it's important to have it there, because it'll either bounce from it or it will break through it. So that's why it's an important one to have and have a look at. And then I also have my linear candles, which in this strategy, you go to your linear candles and you basically you get your linear candles, but the most important thing here is the signal line. So make sure you get a signal line, and then the next thing you want to have here is your EMA difference. EMA difference hasn't changed. It's the same from the previous videos. You got your EMA difference here. You want to input 9 and 20. And then you got the most popular one here, which is the Adian oscillator. So now the way I have it set up is I usually make the bullish a bright green, the bearish a bright red, and the signal line white usually. So how do you find moments to get in? And we are on the S&P 500. Well, the first thing you want to look for is you want to look at your Adian oscillator, and this is big. Now I try to do things on the hour, and basically what you want to look for is when either the green line or the red line is passing through the signal line, and I like trying to do it on the hour. So if you find it crossing up, if you find a green line crossing up on the signal line, that means it is bullish. If you see the red line crossing up on the signal line, that means it's bearish. So it basically shows you the point of getting in, and it shows you the point of getting out. So what you really want to look out for, though, is when it starts going down from the signal line. If you have a green line going down from the signal line, that means it is a retracement. It is retracing, and it's no longer bullish. It is trying to go down. And if you have a red line going down through this signal line, that means it's trying to go up. So these are retracements, and you really don't want to enter trades when it's retracing. So as much as possible, even though it is tempting, do not enter your trades when it is crossing down. You want to focus when it's crossing up. So then what you basically do is you want to make sure everything is matching. So you want to make sure there's either a green or a red line crossing up on the signal line with the ADN oscillator. You also want to look at your EMA difference and make sure that it is also mirroring, that you're in that trend. So right here we see with the SPY that the green line is crossing up. We also see the EMA difference of 9 and 20. It is also giving us a go that it is a bullish trend. And we also see our linear line that it has crossed and it is above the linear line. So everything about that checks off. Basically for the S&P 500, you want to enter right about here. Because you also see this with the 920. So you can write it out. So you can write it out as long as you want, but basically this. Now, if you trade in S&P 500 in Forex, you don't have to worry about this. You can stay in your trade as long as you want, but if you're doing Robinhood, you have contracts and you just have to be precise. So what I do with Robinhood is I only do things on a day. I only trade for a day, then I try to get out. So right here, this is 4 hours. When I'm doing it on Robinhood, I don't like keeping it longer than a day. That's just me. But if we came in right here where the ADN oscillator crossed up, we know that this was a. If I got out in that day, let's see if there's anything. I see 2 days, 4 hours. So this is about $677 for this trade right here. Now, if you traded this on Forex, from right here to right here, you can write it out longer if you want. Because with Forex, you can get in and out anytime you want. But when the market hours are closed, you can't get out of your trade. But anyway, you could go for longer here. But if you did this in Forex, this was a 4-day trade. You would have made about $12. You would have made about $12 with a 0.01. So if you wanted to make if you want to make the same amount of money with doing it with Robinhood, you would probably have to do it at a 0.10. Just keep that in mind. If you did this at a 0.10, you would have made about $120, which is about the same level as doing it on Robinhood. So, not to go off topic, but if you want to make the same amount of money for trading on, if you want to make the same amount of money for trading on Robinhood and in Forex at the same time, you would probably have to do it at a 0.10 lot size. We can look at this real quick, and I'm not going to try and go off topic here, but we see the green line crossing the ADN oscillator right about here. We also see with the difference of two moving averages with the 9 and 20, it shows us that it's a good trade there, and we just write it out. If we wrote it out for 4 days and we did it on Forex, this was $11. Well, this was $11 at a 0.01. So let's do 1134 here. 1134. Hold on here. Let me just get the. Yeah, it was 1134. That was the total amount, was 1134 times. If you did this at a 0.10 lot size, you would have made $113. So to make about the same you would on Robinhood, you would need about a 0.10 lot size for your SPX trade. So not to go off topic, but if you want to duplicate your money, and you want to do it on Robinhood, and you want to make the same amount doing it in Forex, and you want to do it at the same time, do the same to read the chart and then make the same amount of money twice, you would have to do it at 0.10 in Forex. Just so you know, that's a little bit extra information there for anybody that needs it. But anyway, let's keep on going. I'll look at a couple other examples. Now, what you want to do when you're doing this strategy is you want to focus. You want to focus on the line, the red or green one crossing the signal line. So right here, we really don't see that happening. We don't really see it peeking out, so we know that this is really not a good trade. So if we notice right here where it would be peeking out, it's not really shown us with the 9 and 20 here. It's not shown us with enough strength. That's why you got to wait for it to cross on the 80 and oscillator, and you have to wait for it to cross up. But however, when you see it right here, when you see the green line crossing up, you see that this is a good trade. Because you see the green line crossing the signal line real strong. You see the 920, and even though this is a very short trade, this would return probably some pretty decent. So right about here to here, and this would return you, $562, but that would take 2 days. Let's just see if this made it for. Yeah, this is the end of the market. That's why it would be kind of hard to get this trade. But if you managed to get it for 3 hours, you would have made $479. So let's look for another moment when the 80 and oscillator is crossing up. So that's what you got to wait for, is when the 80 and oscillator is crossing up. So right here we see the red line crossing up on the signal line, so this is a good trade. We see the EMA difference here. It's also telling us that it's red and going down. So this is a good trade right here. And we also see that it is below the 995. So if you came right here and you rode this out, let's just do a day. It's the end of the market again. This wouldn't get you a lot. If you did it intraday, it wouldn't get you a lot. But you did it for 3 hours, you would have made $583. But me personally, I do not like holding longer than a day. But if you did hold longer than a day, you would have made a lot from like here all the way down here. This was 9 days, and you would have had to buy a contract for 9 days to get these kind of results. But you would have made about $2,000 if you did. But I personally don't wait. Let's do 1 or 2 more here, and then I want to look at some other stocks. So the first thing you want to look for is the green line or the red line crossing up on the signal line. We see that happening right here. So, and then we also see the 920 is showing us a bullish moment. And then we could get in right about here. Right about here. You can ride this out. Okay, so this is a day right here. So this is $400. Let's look at one more. We want to focus when look at these bounces here. You could have got in here, you could have got in here, and you could have got in here. So these are little bounces. Some are stronger than the others, but let's just check these two. We see the 80 and oscillator. It's crossing right about here. A quick little bounce. This is about $335. We also see it happening right here with the 80 and oscillator. We also see the signal for the 920. And this is about $600. And then it's really kind of weak right there, so I wouldn't have got on that one. So anyway, let's go to a different stock here. I want to show some different stocks. Let's look at NVIDIA. NVIDIA is a good one. Okay, so right now NVIDIA is going against the trend. It did go up, but now it's going down, and it's trying to retrace down a bit. So right now wouldn't be a good time. You want to focus when the green line or the red line is crossing the signal line. And then you want to also get a confirmation of your EMA difference. So you see it happen right here. You see it happen right here, and you just ride that out. You're good to go. You're still good. And from here to there, well, that's 3 days, so I like doing a day. Let's see. This is the end of a market, so this is a $37 difference in price. So if you managed to buy a contract, you probably made about $3,000 right here. But the NVIDIA contracts are pretty expensive. Let's look at, I'm going to kind of skim through a couple stocks here. I don't want to go through this formula. So we see the red line crossing through the signal line right here. So this would be a good time to get in. We also see our 920 is also indicating it's a bearish moment. So here to here, another $37 difference in price. So let's look at GameStop, because I heard that people were talking about how it was starting to go parabolic. Yeah, look at that. Look at GameStop. Let's see if it picked up GameStop. Where did it cross? It would cross right here. You can't see because you got to zoom in, but it crossed right here. So if you got in right here for GameStop, it would have picked up GameStop, and you would have been able to ride this out, and you would have made a $17 difference in price in 3 days. For like 1 day, no, that was the end of the market. But anyway, GameStop just started going up. But let's look at another one. Let's look at Meta. So with Facebook here, we see the green line coming through the signal line right about here. And we also see, so this right, that's 2 days. This is the end of the market. So this is about $8 difference in price. Let's see if we can find one here. Okay, so we see the red line crossing through the green line right here. Get entered here. And you can exit. You can exit anywhere here you want. But right here to here. Right about here. If you did it based off of the 80 and oscillator, it would be about there. But this is a day. Let's get out on a day. 1 day here. So Facebook moved about $68 in 1 day. So yeah, there's that. Let's look at one more stock. Let's look at. Well, I had actually did an Amazon option here not too long ago. Let's see how well this picks up Amazon. So you want to focus when the 80 and oscillator is crossing the signal line, which is right here. And you also see that you're also bullish with the 920. You ride that out for a day. It's $460. So yeah, it works. So let's real quickly, I want to look at Microsoft, because it's like one of the, it's the top asset in the world other than gold. So I want to look at that one. So if you don't know, Microsoft is the biggest company other than gold. So it's like the second most popular asset out there in the world. So let's look at if there's a lot of volatility with it. So we see that it crossed right here. We see the 920 right about here. So is this a day? That's 3 days. Okay, so that's the end of the market. Let's go and look at another one. Okay, so right about here we see the 80 and oscillator crossing, coming here to here. This is the day you made $630. And then let's do this one right here. Right about here. Let's do a day. That's 3 days. Okay, well that's the end of market, so let's just ride this out. Right about here. 6 days, you made a $24 difference in price. That's about $2,470. So a lot of these stocks that I've gone over, you can also trade it in Forex. So you don't necessarily, I have talked about doing it with SPY on Robinhood and doing SPX on Forex. But there's a lot of these stocks, depending on your broker. The one that I use, there's a lot of actually stocks that you can also trade in Forex as well. So you can mainly pick one stock, like Apple and all the big ones, and you can also trade it in Forex. So you can create 2 sources of income by just reading one chart. So mainly doing the S&P 500, but you can also go for individual stocks. There's all the big ones are, maybe I should make a video on that, but a lot of the big ones you can also do on Forex, depending on your broker. But anyway, this works really well for the stocks. I'm going to be going over the strategy again. I'll be going over this strategy again in the next cycle of videos. I'll be going over the other assets as well to show you how to work this with the other assets. Other than that, if you guys like this video, make sure you join my Discord. You'll be able to talk with me. You'll be able to get some updates on what I see in the market with charts and other things as well. So if you like this video, hit the like button, hit the subscribe button. See you guys in future videos.